any bank whichever operates within India, they are supposed to take guidelines from whom? From Reserve Bank of India. RBI being the central bank, right? Central bank of the country does not provide finance directly to the farmers. It provides indirect facility of agriculture through state cooperative banks. So small and large industries have their typical borrowing needs, that is short term as well as long term. Hello everybody, a warm welcome to one and all. I'm Vidhyaashram from the Department of Commerce and Management in Vidhyaashram First Aid College, the Temple of Excellence. Welcome to the second session of this chapter. After the First World War, now India felt that they should have a regulatory body, and that regulatory body should be Reserve Bank of India. So there is an act called Reserve Bank of India Act, that is the RBI Act 1934, established the regulatory of Reserve Bank of India in 1935. So the Reserve Bank of India, that is chiefly known as RBI, is India's central bank. So if anybody asks you what is a central bank and which is the Central Bank of India, you should say RBI. And regulatory body responsible for regulation of the Indian banking system. So any bank whichever operates within India, they are supposed to take guidelines from whom? From Reserve Bank of India. It is under the ownership of Ministry of Finance in the government of India. So who actually take care about it? It's the Ministry of Finance. It is responsible for the issue and the supply of Indian rupee. See, we can't make US dollars. We should only make Indian rupee. It also manages the country's main payment system and works to promote its economic development. So this is what you are supposed to know. So the Reserve Bank of India was established when? That is followed by the Reserve Bank of Indian Act 1934, but it was established in 1st of April 1935. You can get a question. So 1935, and when? That is April 1st. Though privately owned initially, it was nationalized in 1949, and since then fully owned by Ministry of Finance, that is the Government of India. So Reserve Bank of India was conceptualized in accordance with the guidelines presented by Dr. Ambedkar to the Hilton Young Commission, also known as the Royal Commission. So you'll get a question, what is this Royal Commission? You should understand. On Indian currency and finance, based on his book, The Problem of Rupee, its origin and its solution. He had written, see, B.R. Ambedkar had written this book, The Problem of the Rupee, its origin and its solution, and he gave it to whom? To Hilton Young Commission. That time it was also known as the Royal Commission on Indian Currencies. So if we understand the contribution of our freedom fighters, if we understand the contribution of our ministers, if we understand the contribution of the then Prime Minister Shri Jawaharlal Nehru, we will understand that how and what was the need of this regulatory body called RBI. So in 1926, the Hilton Young Commission recommended the setting up of the Reserve Bank of India. At that time, it was established the authorized capital. If you understand the capital, you will feel, I can only start a RBI, right? But that was in that era, right? So the authorized capital of Reserve Bank of India was 5 crores. The government shares in this way was only 20 to 22 lakh. 20 to 22 lakhs. But what was the capital which was required? Was 5 crore. So the Reserve Bank of India was found on 1st April 1935 to respond to economic troubles after the First World War. See, the entire world was in a confusion that why this World War happened and why are we part of it? But they were supposed to be part of it. That is what had happened. Many of them, they never wanted to actually take part in the world war, but they were insisted or they were forced to actually come. And let me tell you, the entire economy, that is the financial economy, was totally corrupt. And the government could not take any hardcore decisions to restore those things. So then what happened? After the First World War, they got to know that we are supposed to be economically independent, financially we should be independent, and that's the reason they took strong steps in regulating these institutions. So the bank was set up based on the recommendations of the 1926 the Royal Commission on Indian Currency and Finance, also known as the Hiltonian Commission. Eventually, the Central Legislative Assembly passed these guidelines as RBI Act 1934, but the formation was 1935, but the act is what? 1934. Main functions of RBI. What are the functions of RBI? If you get a question for 10 marks. Currency regulatory or bank of issue. Bank to the government, I told you in the previous session only. Custodian of cash reserves. So who is the custodian? That is the RBI. Custodian of international currency is again RBI. Lender of last resort, that is if any bank need any support, they'll ask the different banks, but if those banks will deny, who is the person? The last resort is what? Again RBI. Clearing house for transfer and settlement, for any transfer or settlement of any financial disputes or any kind of financial crisis. Who is that? That is RBI. Controller of credit, then protecting depositors' interest. So here RBI will be like a policeman, right? He will see to it that customers will not be cheated. Measures of credit control. So this is a 10 marks question. First thing if you need to understand is credit control is what? Is a function of performed by the central bank to control the credit, that is the demand and supply of money or say liquidity in the economy. With this function, the central bank regulates the credit granted by commercial bank to its customers. It aims to achieve economic development with stability as well as to manage, please understand, as well as to what? To manage the inflationary and deflationary pressures. So it is not like commercial bank can give any kind of credit limit to anybody. So who is there to monitor? That is the RBI. So they're gonna give slabs, and that slabs you are supposed to take it. It involves limiting the credit volume created by the commercial bank, regulating the credit volume, directing credit to productive uses, and implementing the measures that strengthen the structure of banks. So you would have gone to any commercial bank, and if you take any kind of a thing, they'll say according to the RBI we can give you, or according to RBI we can't give you. So why? Because he is the regulatory body. Next, objective. Please do understand here, objective of credit control. So the basic objective is what? The first one is to attain stability in the internal price level, to obtain stability in foreign exchange, to maintain stability in the money market through liquidity control measures. Please do understand here, to promote overall economic growth and development by maximizing income. By what? By maximizing the income, employment and output, to promote national interest. See, this is the main thing, that is India should be the first priority, right? So here quantitative, if you understand, methods or general methods, if you go with it, quantitative methods of credit controls are related to quality and the quantity of volume of money and are aimed to regulating the total volume of bank credit. So these tools are indirect in nature. They're not direct. They're what? Indirect. And they tend to influence the loanable funds for the commercial bank. Next is bank rate policy. Again, bank rate policy is also given by whom? By the Reserve Bank of India. Open market operation, which is also called as OMO. Variation in the reserves ratio and repo. Now, We had a problem very recently when Sitharaman, she just said that the repo rates gonna increase. So the meaning of here, the repo rates, why many people were opposing that? Because if the repo rates increase, again the interest also increases. So it is what? It is again a problem for whom? The person who has taken a loan or a person who wants to take a loan. So here we need to understand all these systematic calculation is done by the Ministry of Finance, right? But it will impact the public to the maximum. So that's why you need to choose proper person for in your voting, or else what will happen? Anybody who ever comes without knowing the knowledge of the Reserve Bank and its power, they'll start implementing the same. So we had so many other people here who really took care of our repo rates or any kind of a thing. Like example, if I need to give you is Manmohan Singh. So when Manmohan Singh government was there, and he was, when I am going back to 1991, when we had this LPG, liberalization, privatization and globalization, when he was the finance minister and PV Narasimha Rao was the Prime Minister of India, we were in the urge or the end of bankruptcy or the financial crisis, but he took bold decisions and we went with liberalization, privatization and globalization, and that is how he actually made the entire country in stabilizing the environment. So here the repurchase option is also what? The bank or the RBI who does that. So here if we understand carefully, that is the qualitative, what exactly it does. In the qualitative methods, we go with the fixation of margin requirement, credit rationing, regulation of consumer credit, control through directives, moral suasion, publicity and direct action. So these are the things which happens here. So the next one we have is RPA and agricultural credit. So here please understand, India being a country where the real occupation or the main occupation of Indians are agriculture. So how RBI helps in agricultural credits? So the first one here is agricultural development is regarded as the prerequisite of economic development of the country, because 70% the present of population in the country are engaged in agriculture. So how? 70%. And the total share of agriculture and allied sector in the term of percentage of GDP is 13.9. So 13.9% during 2013 to 2014. I'm telling about the 2013-14 era, right? So agricultural export constitutes a fifth of total export of the country. The RBI realizes the basis contribution of the agricultural sector in the overall economic developments. Hence, they go with more of agricultural credits. So in this priority, what happens here is they provide raw material for industrial sector, provide the market for producer goods and consumer goods produced in the non-agricultural sector, provide labor and capital to non-agricultural sector, provide foreign exchange also. So these are the things which RBI does. And RBI being the central bank, right? Central bank of the country does not provide finance directly to the farmers. It provides indirect facility of agriculture through state cooperative banks. So they'll not give, say it's not like RBI is giving the farmers. No, it is not. RBI will give it to the cooperative bank and cooperative bank will give it to the farmers. So we have farmers cooperative banks. Through the media of cooperative credit system, the RBI thus provide the type of loan. What are the loans? Short term, medium and the long term loan. That is the best part for any farmer if he goes for the long term loans or the medium term loans. And we have small farmers. When I say small farmers, in the sense they have less land, and what they do is they take short-term loans. RBI and industrial credit. So I told you about the agriculture credit, how they gonna help the farmers so that they can have sustainable development here. Now we come to the industrial part. So rapid industrialization is a key to accelerate economic growth and development. So prerequisites of industrial developments are 5 M's, that is the men, material, machines, management, and money. So you need money, right? So RBI is there to help you with that. So money is the primary essential. Money in industry comes from the industrial finance. So here, what is the essential? That is the money. In necessitated and adequate supply of short-term and long-term finance for the purpose of industries, fixed and working capital. We need money, and who gonna help us? That is the RBI. Next is RBI. If we understand the concept of how it helps the industrial credits, we'll also know that the small scale industry is confined to urban, semi-urban as well as rural area. So small and large industries have their typical borrowing needs, such as short term as well as long term. So who gonna help? The RBI gonna help. So commercial banks have been provided short term credits to the industrial sector, but they did not favor long term industrial finance in the pre-independence era. So the capital market also underdeveloped in the country. After independence and during the planning era, thereafter the Reserve Bank of India assumed that the major responsibility of easing the problems of the industrial finance. So here we need to understand everything done by the RBI is the trial and error method. Are we supposed to give? Are we not supposed to give? If we give, what's gonna happen? If we'll not give, what's gonna happen? So that is when we have seen the drastic change of RBI in imparting the economic development and economic sustainability in the livelihood. See, understand, India being a country which got independence only after 1947, right? 1947. So from 1947, if you understand, till 2024. So we are the young country compared to the US, because US got their independence way long back than India. So here we need to understand that. So next one we have here is the demonetization. So everybody know what happened in 2016. That is the 8th of November, 8 o'clock. Our Prime Minister Shri Narendra Modi ji came and he said something about this particular topic called demonetization. So you will get a 2 marks question. What is demonetization? And you are supposed to write this. So demonetization is the set of stripping a currency unit of its status as legal tender. Demonetization is necessary whenever there is a change of national currency. The old unit of currency must be retired and replaced with a new currency unit. So here, what is demonetization? That is stripping a currency unit of its status as legal tender. So that is called demonetization. So what are the merits of demonetization? The demonetization policy will help India to become corruption free. This move will help the government to track the bank money. The government can get income tax return for the income on which tax has not been paid. So these are the merits. This move has generated interest among those people who had opened Jan Dhan account under the Prime Minister Jan Dhan Yojana. They can now deposit their cash under these schemes, and this money can be used for the development of activities of the country. So demonetization policy will force people to pay what? Income tax return, because there are so many people. I was so shocked when I saw the statistics that only 21% of people who are supposed to pay tax, they are the one who pay tax. But if you compare with 100%, say it is only 21%. So that means there is a lot of things which RBI need to do. So what are the demerits? Now the first is the announcement of demonetization of the currency has caused huge inconvenience to the people. That is, yes, very true. Even we all stood in the ATM for hours together, right? They are running to banks to exchange, deposit and withdraw. So what happens is they get a panic saying that I suppose I have 5 lakh rupees, right? And demonetization happened. Now we need to go to the bank and deposit, but they are accepting deposit, but they feel that the excess money is a black money, but it is not true, right? So that is what the panic thing which we had got it. So it has deeply affected business due to the cash crunch. Now cash crunch happens, business cannot be smooth, right? So that is what the problem of it. Many poor daily wage workers are left with no jobs and their daily income has stopped because employers are unable to pay their daily wages. Again, that happened, right? So if you give the old currency of 500 or 1000, so the laborers will not take. Now we don't have the new currency, so that the employer will not give. So this actually happened, and there was a lot of problem and chaos. So the government here, what happened, is finding it hard to implement this policy. It has to bear the cost of printing the new currency notes. It is not that easy actually, but now it is all done. Now we are in 2024 and I'm talking about 2016, which happened, and we have forgotten that also, right? It is also finding it difficult to put new currency into circulation. So many banks had a problem, right? Because customers or the people, they never had that patience because they wanted their own money. So to take our own money, there is a problem. So that became a chaos. So the 2000 rupees note is a burden on what? People, has no one likes to do transaction with such high value currency. Very true. See, when we had 1000 rupees, to take a chocolate or a biscuit, we used to hesitate, saying that if we take it, we get the remaining change, and because we have that remaining change, we will actually spend it. That was a logic behind. Now, getting 2000 rupees note, and what is that you're gonna buy, right? So purchasing power will increase. When it increases, what will happen? You will not buy whatever is needed. You will buy whatever you feel like buying. So that is also a problem. Further, many people have clandestinely discarded the demonetized currency note, and this is a loss to what? The country's economy. But that happened for a short term, and later people actually went with it, and we moved on. So anything particularly to this session, if you have any doubt, please do ask me. I'm always there to help you. Thank you so much. I'll see you when I see you. Thank you.